What's good, everybody? What's good? What's good? Welcome to the introduction to this entire course or entire, I don't know how to call it, but I think it's a course basically because what I'll be doing with this specific series of videos or this playlist, I'll basically unveil my entire strategy, guys. My entire strategy in its entirety, everything that I do, basically what ICT did, right? I'll unveil the entire strategy. I'll give it all to you guys. Call it an early Christmas present. But I've been recording this thing for days now, since last week, Thursday or Wednesday. Now it's Tuesday, the 12th of December. So I've been recording this thing for days. I actually started with the other parts of this entire series, and then I ended up coming to the introduction. It's kind of weird because I didn't really know what to say with the first introduction of the video. But basically, what we'll be doing in this entire series, I'll be going into the key elements of my trading one by one step at a time, like market structure, risk management, the best sessions to trade, psychology, my entry strategy, my investor key levels, and the top down analysis itself as a whole, right? I'll be going through all those finer details in individual videos and yeah, basically in individual episodes, individual videos in the entire series. And those who like the strategy will get a chance to actually understand it and learn it, and those who have their own strategies can catch a few things here and there, whether it's the psychology part, whether it's the risk management part, whether it's the top down analysis, or whether it's the ICT entries. So it'll be up to you guys. And yes, my entry style is basically the ICT method. My my basically what I do with my strategy, if I summarize it, I top down analyze. Basically, it's top down analysis. I analyze from the daily time frame. The way I analyze, I don't do trend lines, I don't do indicators, I don't do all that stuff, and I don't give it flack, and I don't hate it. It's just not my style, it's not me. I prefer a clean chart and a simple chart. The only things that I use apart from the candlesticks themselves is the horizontal lines and the vertical lines. The vertical lines for the times and the dates and the sessions, the horizontal lines for the psychological levels, the investor key levels, the zones of liquidity as well, where there's sell side liquidity, buy side liquidity, or some of you might sell where there's resistance, where there's support, right? That's what I use, the horizontal lines. But the whole thesis of the thing, the whole idea behind the strategy, I mostly focus on individual candlesticks, right? Individual candlesticks. I read what the candles are telling me. What the candlestick is telling me, I interpret it, I read its language, and then I go into the current trading day based on what happened the previous day, or what the previous day's candle told me was happening and what might actually happen. For example, with here, right? With here, we had a Euro USD trade. You will see it on one of the episodes because I recorded the other episodes before this one. You'll see it, we had a Euro USD sell and I didn't place a take profit. So I mistakenly still had the trade over the weekend. So the trade was still open over the weekend, and then we found this on my video about the investor psychological key levels, the zeros and 50s. Basically, we spoke about this in this psychological level right there at 1.07500, 1.07500, or you want to say 1.075,000, whatever you want to say. But this key level right here, and I told you guys that no, I'm gonna close that Euro USD trade because this key level, I do not want to mess with it. I do not want to mess with a strong psychological level. I'll wait for the market to tell me where it wants to go, basically. Whether you're gonna learn this thing on the advanced candlestick analysis part, whether we're gonna get a momentum candle upwards, whether we're gonna get a momentum downwards where we break this key level. The market is gonna tell me where it wants to go. The market will not turn without indicating first. It's impossible. The market will always indicate before turning. It will always give you signs like, look, we're about to turn, or look, we're about to break this key level. It will give you signs first. So what I'm going to do, the candlesticks will tell me the signs. So we're monitoring EU on the daily time frame. As I said before, we'll see what's going to happen on the daily time frame. But there was also another trade, to make an example of the strategy again. There was also another trade that I missed because there was a blackout, bro. I'm so heartbroken. That thing really broke my heart. If you're voting for ANC, bro, all I can say is F you. You shouldn't be voting for those idiots, bro. We can't have blackouts for an entire day, bro. Like we literally had a blackout the entire day, and the network just disappointed me. Rain just disappeared just like that. So I think I will need to have a Vodacom SIM card or something. I need a network that is really good even during load shedding or when there are blackouts. So there's a trade that we missed. If you want to see the trade itself and the analysis itself, right? I'm just gonna summarize it in this video because there are other episodes where I speak into detail about these things. But this is the video, right? It's the risk management video. If you go to the risk management episode, it's somewhere there. You'll see it in the playlist. When you get there, you'll see the analysis on the Nasdaq. We did this analysis from Thursday. It started from Thursday, right? The video before the risk management video, there are other videos before this one. You'll see the Nasdaq analysis where I told you guys that with the way Nasdaq was positioned, there's a very high probability of Nasdaq moving upwards. The only thing that really was a turn off is just that it's December, but because of the structure of the market and the way the candlesticks were forming, you could see that there was a lot of stop loss hunting or a lot of hunting of stops, or there was some Judas swing movement on lower time frames, and you can see there was a momentum close right there, or some of you might say it's a bullish engulfing right there. They're just clear signals that it was telling you that okay, it was indicating that it's turning to the upside, or there's a high probability it'll go to the upside, right? So it was quite clear as day, and it really shot up, bro. It really shot up, and it didn't just shoot up only, it even gave the, with my entry strategy, right? Let me close this thing, bro. It's gonna cause my computer to lag right now. I wanna close this thing so that I can show you guys properly what I'm talking about. Oh, there's the Nasdaq chart right there. Oh my goodness. My processor is quite weak today. I don't know what happened. This load shedding thing is really messing up with my devices, bro. But anyway, this is the update on that Nasdaq trade. Here's the update right here. You'll see the analysis properly on the other videos, guys. So I'm not really gonna dwell on the analysis that much. But plus, I did analyze it right now. So let's step on the. Should we go to the 1 minute time frame or the 5 minute time frame? Let's start on the 5 minute time frame. This is top down analysis basically. If I may quickly summarize top down analysis right now, I got the bias on the daily time frame. Then what did I do? I stepped down on the 5 minute time frame, and then there's the part where I'm gonna speak about sessions as well, right? There's a video, I'm gonna do a video about that, the best times and the sessions to trade, right? 1 hour, I even spoke about it. I said an hour before the New York session opens, or maybe few 2 hours or so, 1 hour 30 minutes before the New York session opens. That's when we open the charts. That's when we open Nasdaq basically. With my style of trading, that's the time when you should be sitting in front of the chart and looking for those low time frame entries. If you want 5 minute and the 1 minute 3 minute time frame entries, you should be sitting in front of the chart, but you can enter on the 15 minute or the 1 hour if you're a swing trader. And I am also a swing trader, but I also get those day trading entries like the one that I'm going to show you right now. But I'm going to quickly summarize the entry strategy according to how Nasdaq was structured yesterday, right? The entry happened immediately at around 3:30, right? That's an hour before the New York session opened. Just there at 3:30, bro. Precisely as I said, like an hour or so before the market opens, you will definitely get those entries. Right. Let's see. But it's not my unique knowledge. It's not my unique knowledge. Yes, from my experience, I already knew that the New York session is when mostly assets like Nasdaq, the Dow Jones, that's when they really make a lot of the movements, the S&P 500, right? But some of these things, most of these things, ICT teaches these things, right? But sometimes ICT can be hard to understand for a lot of people. Even with me, it took me watching his videos twice before I actually understood it. But before watching my videos, before watching the videos on my entry strategy, you can go ahead and watch the ICT 2022 course and watch the first 4 episodes. Yeah, watch the first 4 episodes. Let me put it that way, 4 or 5, I think. Just there before it reaches the power of 3 concepts. Right here, there was a fair value gap right there. Fair value gap. The previous lower high was broken as well, created a fair value gap, It came back, it retested this fair value gap right there. Fair value gap, imbalance, or the algorithm, printing price, whatever you want to call it, those fancy terms. But I just prefer using the word fair value gap, right? This is where you would have entered, bro. This was a glorious entry. Even over here, there was a second fair value gap as well, right here. Let me show you guys, bro. I'm gonna show you guys on the entry strategy video. There was another fair value gap right there. You could have used the 40 pips stop loss. There's a reason why I'm not going below 40 and 50 pips, right? I prefer a stop loss that is a little wide, like to give it a little bit of breathing room, because in most cases they love manipulating assets in the market, right? And if you watch the risk management video, you will remember another thing as well. The risk always remains constant. I always risk either 0.5% with an account, or if it's another account, I'll risk 1%. I will never change the specific risk that I've set for an account. The risk in terms of percentage is the percentage based on the total amount or the total equity you have in your account when you started the account. Let's put it that way. If the account is a 10, for example, this FTMO account, we'll be trading this FTMO account live in front of you guys. It will be live in front of you guys, right? We'll be trading it live right here. So based on this FTMO account, this one specifically, we're risking 0.5%. The reason why I'm risking 0.5%, I explained in that other part, is because I started the account risking 0.5%, right? Because I was using the account to experiment mostly. As you can see over here, look at how many losses account. This account I was experimenting. This is the time when I was still learning the ICT concepts. It was around August. I was learning the ICT concepts and trying to integrate the things that seemed really attractive to me, because I wanted to create an entry strategy where I go below the 1 hour and the 30-minute time frame, because my lowest time frame of entry was around the 30-minute time frame. I wanted to go below that and go as far as the 5-minute time frame, but now I've gone as far as the 1-minute time frame and the 3-minute time frame, right? But look at how many trades it took. Like, there were about how many trades? 20, 30, 25 trades, I think. 25, yeah, we could say roughly 25 trades, because the equity graph here was dropping, right? It went as low as -3%. I was risking 0.5%. You will never, now the account it's at about plus 3.2%. And if yesterday's trade, oh my god, if there wasn't a blackout, we would be at 5% right now, bro, because we're gonna make 2% yesterday. We would be at 5%, but it is what it is. It is what it is. I'm heartbroken, I'm in pain because of what Escom did yesterday, but we live, we learn, we keep it moving, right? So it was at -3. Imagine, because of the way I control my risk. That's why I say my system of trading is mostly based on risk management. Managing risk, keeping a stable psychology. Those two things are my pillars in my trading, bro. That's my pillars. Yes, the strategy is also very important, but my pillar in everything that I do in life, even when I start buying stocks and buying shares and investing either in real estate or whatever, my main pillars will always be to manage the risk, to control my risk, to control the amount of money I can lose from the investment that I'm making. That should be your mindset. But I speak about this on the risk management video, so I'm not gonna dwell on it. We went to -3. The account is now at 3%, which means it went all the way to 6. It went all the way in a 6% gain, basically, right? It's now at 3%, and the consistency rate. This is when I had a full system, right? Once my system connected, I was done with my entries. I was done choosing the best assets that I want. Basically, the best assets are mostly Nasdaq, US30, Euro USD. But if I was to rank them based on the safest ones and the ones that have the biggest risk to reward ratio, I would say, surprisingly, it might shock some of you people, it's actually Euro USD first. I would actually place Euro USD first, followed by, maybe I would say, Nasdaq, because of how safe Nasdaq is. Some of you might argue with me. It is safe for people who know it and people who understand it. It is safe. And if you know that if your stop loss range is around 70 pips, 100 pips, 50 pips with Nasdaq, and your entry is good, you are safe with Nasdaq. US30 has those monster movements, yes, and it is the one that has made me the most money. It is US30, right? But I would rank Nasdaq a little bit higher. The consistency score is at 88% right now. And I want to show you guys just a brief outlook. You know what? If you watch the risk management video, you'll see the losses. There are a lot of losses, probably more losses than profits, obviously, because I was experimenting. But it's also a good lesson to you guys that you can lose a lot of trades. But if your risk management is down packed, bro, if your psychology is down packed, your account will still consistently grow and gain long term if you manage your risk properly. Stop those things that these 1 minute strategy guys who claim to be gurus are teaching you. You know who it is. Stop listening to those people. Stop over leveraging. Brokers are making most money from you through over leveraging. Right. I understand we don't have the capital to have big accounts, but already if your account is risking more than 5% of your capital, you are at risk. You are at risk. Your psychology will be a turmoil. It won't be easy. You need to be lucky. You need to get that. I speak about this as well on psychology as well. Mark Douglas as well speaks about it. Yes, can you see with this account, for example? Yes, I was experimenting. It makes sense. Yes, there were many trades, more than 30 trades. But in a series of those trades, I never knew which ones would be losses, which ones would be profits. I never knew which one. I never knew if the second trade was going to win, if the 20th trade was going to win. I never knew that. But I just knew long term, I'm I'm not gonna blow this account. It's impossible. I knew with my risk management it's impossible. And I knew with my risk management it's gonna grow. By risk management, I'm also talking about the risk to reward, the reward as well. I knew that I'm gonna hold a trade for at least a 1:2 risk to reward ratio, for at least a 1:3 risk to reward ratio. And I knew that the assets that I'm choosing, Euro USD, US30 at that point in time, I knew that with these two things, I'm gonna get a 1:5 trade. I'm gonna get that 1:6 trade. I'm gonna get that 1:4 trade. Right? I knew that I'm gonna get those 4 RRRs, those 5 RRR trades. I knew that. That's how your trading should be. Your trading should be based around managing your risk and knowing how you will gain, how much you'll gain based on your analysis and whatever, right? So let me not ramble on too much about that. But basically, in this whole thing, we will document this account. We're gonna document this account. Every trade that will be taken on this account, you guys will see it. All the losses, all the profits, all the gains, some of the analysis, you guys will see it all here on this channel right here. The education, it's all gonna be free. You guys are gonna get all, you're gonna get my strategy. I don't know if you'll understand it, but you'll get it there. It's there, guys. It's, as I say, the gist of it is basically top-down analysis. That's the gist of it. It's top-down analysis coupled with ICT style entries, or even if you don't like ICT style, just use candlesticks for your entries, right? Wait for those weak rejections, wait for that manipulation. For example, right here, you had rejection, a bounce, a bounce, a bounce, 3 bounces. It faked a breakout right here. It came back inside. You could have entered there, right? Those are simple concepts when it comes to entering the market. You could have used those concepts, right? But this trade, the trade from yesterday was about a 1:4 trade, I think. Oh my god, bro. I missed the monster trade yesterday because of effing bloody SCOM, bro. Ah, man. And rain really screwed me up because the network was gone, bro. Really screwed me up yesterday. I was really counting because I had mobile data. I was really counting, okay, there's no electricity, but at least I'm gonna have mobile data so I can use that to catch the trade and just let the trade run, and just usually that's what I would do. I'll let the trade run and just go away. But look at what happened, bro. I didn't even get the chance to enter the trade. So many opportunities. 1, 2, 3. There were 3 chances to enter this trade before even 4:30 kicked in. Because you can see this is a 4:30 spike. It is, right? Hope I'm not wrong. Yeah, it is a 4:30 spike. It's when the market opened in the. It's when the bell rang in the New York Stock Exchange. That's when the Nasdaq spiked right there, right? That's when it spiked. So it was a 1:4, and I think it's actually a 1:5 if you actually extend it even further. But it is what it is. The trade is gone, and based on psychology, we have to wait and see. The only scenario where I see myself entering Nasdaq right now, with how high it has climbed, it has to really drop hard, and I doubt that can happen in December, bro. I doubt, because major news really happen in December, and investors are really there. They're really putting in funds in December. But If we're lucky enough, maybe it is gonna drop. Who knows? We'll see. I don't even care about US30, bro. US30 is sky high right now. US30 is sky high. Forget about that. But as there's also another, I also speak about the reasons why you should focus on one one asset, one or two assets in your trading. I also speak about that as well when we speak about my strategy and my trading system. Basically, I also tell you guys why you should focus on one asset. So hopefully you guys will watch that. And oh yeah, I also forgot about this, the maximum loss. Despite the massive amount of losses in this account, the maximum loss is only at minus 1.7%, 1.76, so minus 2%, slightly right about there. Now it's actually minus 1.76 because I only risk 0.5% on this account. The most that I've lost in a day is 1%. Yeah, the most that I've lost in a day is 1%, basically about £100. That's the most that I've lost in a day, and it's currently at 3.2%. So we're gonna see, man. But I doubt December. I really doubt December when it comes to trading, bro. I really doubt. We're really blessed to have this trade, but I was screwed up, and I'm still heartbroken over the thing. But I'm really trying to control my emotions, right? I'm really trying to control my emotions, to just relax. But I know I'm not gonna revenge trade, and I'm not gonna place trades that I'm not supposed to place, because those are just rookie mistakes. So you can't be making such mistakes in trading. So I'm just gonna wait. But you can make those mistakes if you're trading one thing. That's why I say the beauty of trading one asset. If you're only trading Nasdaq, you can afford to take those three losses in a row, those two losses in a row. Because as you can see right here, this was a 1:4 trade, and it probably extends. It can even become a 1:5 trade today, right? Which means even if you were to lose 3 trades in a row in the past, you would recover all those losses with one trade, right? That's why I emphasize in my system, guys. If you're gonna learn my system, please don't come with your own risk management, please. Everything when it comes to me myself, I focus on risk management, guys. My identity is risk management. Maintaining a stable psychology. To have a stable psychology, you need to manage risk, so your mind doesn't go all over the place. It's as simple as that. If you lose 2% in one trade, it's gonna get you ahead. It's really gonna get you ahead. Unless if you have the mindset of a gambler, right? If you have the mindset of a gambler, then you might survive, though. You might survive the emotional turmoil, right? But I really don't like other assets, bro. That's why I only look at US30 as well, because I can trade it. Let me put it that way. But it's a lot safer to trade Nasdaq than US30. But the reason why I dislike Nasdaq is because sometimes Nasdaq is too fast. Not fast as in a sense of, oh, I'm gonna lose a trade. No, it's too fast in a sense of you are highly likely to miss your entry. That's the thing about Nasdaq. There's a high probability of you missing your entry on Nasdaq. That's what I dislike about it. But I'm wondering, when is the next key level on Nasdaq? Let's check the monthly time frame. Is there another key level up there in the 16,000s? Oh, yeah, there is. Oh, it is. It's 16.5. So Nasdaq is headed towards 16.5, right? This is an investor psychological level. Can you see? There is a huge rejection right here. A lot of spikes for 3 months. 1, 2, 3. 3 months where we're getting spikes right there at this 16.49999. So I round it off to 16.5. This is where I speak about investor psychological levels. So you'll see this part on my video about investor psychological levels. Let's fix this to be 16.5, 16,500, right? Because that's where it is right there. I think Nasdaq might start the next year by first touching that level. Maybe, right? I'm saying there's a possibility, right? Remember, with trading, we are not certain. There's possibilities, right? Because the market, at the end of the day, the market is gonna do what it wants. But I'm looking at the possibilities. It's quite high, it's quite far, but it's reasonable. It's a little reasonable. So I think for this December, I'll only be watching Nasdaq. Let's see, maybe Nasdaq might actually climb and reach that 16,500 level before it starts doing these funky drops, those massive drops. And I'm waiting for those drops, bro. Because as you can see right here, after this massive candle, that could have been your signal that you should start looking for sales after this, right? After that massive drop, that huge bearish momentum candle, and you can see how small, how close the high, the low, how close the low and the close are, right? The low and the close are very close to each other. The low of the day and the close, they're very close to each other. The candle, the body is massive, and you can see there's a huge tail up there. The high of the day and the open of the day, there's a huge tail up there moving towards the 16,500 level. Then what do? They do a huge, there's a possibility that there was a Judas swing right there. There was a lot of manipulation that happened right there, and manipulation is what? It's an opportunity to enter trades. So for that week right there, there was probably towards the end of the week, right, it sold off a little bit, stayed sideways. There was a lot of stop loss hunting that happened there. The following week, it tanked. It really dumped all the way down. This was in January 2022. It really dumped in 2022, bro. But let's see if are we going to reach those 2022 highs. Let's see. January 2022. So in December 2022, it reached 16,500. December 2023, we are close to the 16,500 level. Are we still gonna repeat last year's procedure where we reach that level and then we dump again? We'll see. We will see. Let's take it one step at a time. But from current price action right now, with my favorite time frame, the most important time frame based on my analysis, the daily time frame, the god of all time frames, the daily time frame. Based on it right now, we are strongly bullish. Even if you count this candle as well, this candle as well tells you that the market is strongly bullish. It's really bullish, meaning it's strongly headed to the upside based on this. So what we say after analyzing like this, there is a higher probability of heading upwards than downwards, but there is a probability of going downwards. It's there, but there is a higher one of going upwards, which means you need to also take into account the possibility that the market can drop. So you manage your risk. You will be buying, but manage your risk, right? The first thing you think about before entering the trade should be your risk. How much are you willing to lose for that trade? Are you willing to lose 1%? Are you willing to lose 0.5%? Are you willing to lose 0.25%? How much are you willing to lose for that trade? That should be the first thing on your mind. So right now we are pointing towards the 16.5 level as our ceiling. That's the ceiling we're looking at in the market right now. So we'll see if Nasdaq will be generous enough. Listen to my words, guys. The only situation where I see myself entering Nasdaq, if Nasdaq is generous enough to drop, or if on the 5-minute time frame during the New York session, it gives me a Judas swing or some manipulation, and then it gives me a fair value gap, and then I start entering from there. So it's going to depend on all that. And if there's no load shedding today, I'm gonna record it if there's an entry. If there's no load shedding tomorrow, I'm gonna record it if there's entry. If there's an entry, let me put it that way. So I'll only be watching Nasdaq for this December, maybe depends what EU is gonna do. If Euro USD decides to make some movement, then I'll also consider looking at Euro USD as well. But the Dow Jones, man, I'm not looking at the Dow Jones. I think I'm done with the Dow Jones for the year. We're gonna see US30 next year. So I hope these videos are gonna help you guys as you go into the year. What else are we gonna talk about on this course or these lessons? Market structure as well. The market structure video is gonna be short, guys. Market structure is quite straightforward, and it is important, but it's not that important to me, honestly, because sometimes we trade against the trend. So that's why I mostly focus on candlesticks and formation of candles, right? And how candles behaved, how they formed. I mostly focus on that. I think ICT also does the same with his power of three concept. I think he low-key does the same thing with that power of three concept. I haven't really mastered it. I haven't really watched it properly, but maybe I'm gonna take the time to watch his power of three concept and hear what exactly he's saying there. But I know he speaks about accumulation and distribution. I don't know the manipulation part, but I know the accumulation where price is building up, and then the distribution in the direction of the market or in the bias that you were analyzing for that specific day, right? Power of three concept, it also applies here, right? Because there was the open. I think that was the accumulation right there where we got our entries, where I showed you guys the fair value gap. Then there was the distribution in our direction where you would have made the profit. I think that's the power of three concept from ICT. That's how he does his market structure videos or his bias video. I think it's the bias video here, the bias video. Yeah, how to catch the market bias. Yeah, it's quite straightforward. His strategy is quite straightforward as well, but it is really accurate. I'm gonna give him that. It is really accurate, but you must have your own understanding of the market sometimes. Let's see. So that's probably it for this specific video. This is the intro, and we'll be documenting the FTMO account. That specific FTMO account. It's a £10,000 account. We're gonna be documenting that one and see the growth. The reason why I chose FTMO is because it's the biggest and the most trusted one. So I chose the most trusted one. So you guys don't start thinking I'm promoting prop firms or promoting brokers. So I chose the biggest, most trustworthy one, and the one where I'm least likely to have connections with. So I chose that one. So I chose FTMO. So if you do want to use prop firms, no, it's risky, bro. When it comes to trading, guys, trading is a very risky thing, right? It's very risky. You lose real money. You are playing with real money. You are losing real money. So you need to take that into account when it comes to trading. There is no broker that is trustworthy. There is no prop firm that is trustworthy at the end of the day, because anything can happen. This is life. This is business, right? So we use these things as stepping stones. We use these things to get access to large capital, right? We're just using these things as access. Anything can happen. You can lose your money, right? So you need to take things like that into account. That's why I don't jump into hype. If I see people hyping a new prop firm, I don't jump into hype. I do not. I prefer reputation, credibility, and the trustworthiness of something before I put my money into it. Because at the end of the day, this is hard-earned money, right? You don't want to be losing your hard-earned money. So these are the investor psychological key levels that we placed on that previous video. So if you watch the video on investor psychological levels, you'll see it and you will know how to place them. It's really straightforward, man. It's not complicated. It's a straightforward thing. So we'll see what happens next. As you can see, man, I was doing a lot of experimenting, bro. US30 cash, US30 cash. But anyway, that's it for that. If you guys see how many free trials I have, I was using free trials. I use free trials to find the lot size, right? These are the free trials right there. This is the challenge. This is the challenge. The 3.2. The time is unlimited. And then there is the trials here. The trials that I've done, right? Not passed, not passed, not passed. Obviously, it's not passed because I was serious. I wouldn't take a 2-week trial serious, right? But what I was doing with these trials, I was finding lot sizes. So when it expires after 2 weeks, I open a new one, find lot sizes. Okay, I want to risk 0.5% on Nasdaq, but this time I want to use a 30 pip stop loss. What I'm gonna do, I'm gonna place trades on the trial account until I find the right lot size. I know it's a long process, but I don't know how to use the lot size calculators. I don't even know where to find them, how to use them. You can see how many trial accounts I've got, bro. So many trial. The problem with these things, it's only 2 weeks. How many? 14 days, bro. They really need to change this thing. Can't be 14 days. They need to make it unlimited as well, right? Prove your worth. They need to make it unlimited. Can't be 14 days. That's why I have so many trial accounts, because it expires after 14 days. Like right now, the one that I had expired 23 November. I have to open a new one. So I'm probably going to open a new one when I'm close to taking another trade, and I'm using a stop loss that I don't know which lot size to use. I'm probably going to open a new trial account, right? But anyway, that's it for this specific video. So watch the other videos if you want to learn the system and understand the way that I analyze the markets, and hopefully it's going to help someone out there, and someone maybe who might have needed a small push. Maybe this video is going to give you that small push, or these videos are going to give you that small push. But anyway, the only videos that I'm left with right now is I'm recording this intro to this course right now. It's market structure, my entry strategy, and the top-down analysis video. I have to do the top-down analysis video next, so I'll catch you guys on the flip side.